What's up, y'all? Welcome to Try's World. It's Thursday, March 12th, 2026. Another busy day. Every day is busy, but today markets dropped around, I guess, 1% or so after Iran is... Some person on my YouTube the other day was like, what's Iran gonna attack with? And I read a Wall Street Journal article today that was talking about Yemen, I think, that was also down and out, but they were still able to, with drones and just low-tech weapons, do some damage on shipping lanes. I think it was the Strait of Hormuz, let alone Iran, who is a stronger country militarily. So whoever said that is completely uninformed. Please watch the rest of my video, by the way. Especially you. So sometimes I won't reply, but I'll reply through here. And so that's what they vowed, and oil prices jumped due to it. Jumped a lot. And markets also responded, I think, by selling off. And so to me, it's still another Wall Street Journal article. What's going on underneath the market? A lot of violent moves. That's the best way to say it. And so as I ended yesterday, you're welcome. I mean, that's what I keep saying. I mean, the S&P 500 index is going to do most investors really well. And if you've done that, you really haven't felt any of this. I'm not saying that's going to continue, and I'm not in the business of trying to guess what's going to happen tomorrow. I'm not, anything can happen. Let's just say that. Anything, good or bad. And it's up to the investor to work in the face of that uncertainty, rely on valuations. The passive investor, though, who's investing mainly in index funds or mostly in index funds, shouldn't market time at all. They should continue to contribute on a regular basis because it automatically buys more when things go down, automatically buys less when things go up. But you should always kind of be buying. Now, there's a caveat to that. If for whatever reason your budget doesn't allow you to save a certain amount, I totally get it. You don't have to continue to contribute if you simply cannot save. It's not easy to save. So I've skipped over a lot of steps by going into investing in my podcast here. Not on purpose, but because I think it's important to highlight that. You have to invest long-term funds. These should not be funds that you need to buy food, put food on the table, or if you're living literally paycheck to paycheck and you can't save anything, of course, you shouldn't be investing anything that you need on a regular basis. And so I don't mean to come off as totally forgetting that part. This is the assumption here in terms of investing and making your money work for you is that you've saved a certain amount so that you can invest it for the long run in the market. So funds that you put aside, you shouldn't just save 10% no matter what. You should save 10% if you can save 10%. If you can save more, great. I mean, you get to your investing goals faster. So I used a lot of financial advising software over the years, and I got into that obviously in my last role. Not my biggest strength, but I can speak on it. In terms of compound interest, I use the rule of 72. If you've never heard of that, it's 72 divided by the interest rate. I believe it gives you the amount of years it takes for your investment to double. And that is the power of compound interest. So, for example, if you are compounding your investment by 10% a year, 72 divided by 10 is around 7. And so, and my bad, yesterday I was like 0.25 for the probability calculation. End of the day, though, and I knew the end result, so I was jumping to the end result in my mind, and I got the end result correct, so I didn't edit it. The whole point of this is I do minimal edits, so you'll see the mistakes as well. But rule of so every I don't know, 7 years your money will double if you can compound it by 10. It might be reversed, by the way. But the point is that's what I understand of it, and that's how you can calculate sort of compound interest. This NBA notification is killing me, especially now. But anyway, I need to silence those because it throws me off. But the rule of 72, yeah. And so you can calculate what you need. And in terms of retirement, you got to ask yourself, what is it that you need per year to live? And live comfortably, or so you want to calculate your future expenses and things like that. based on that. And so let's just say you have a pension, let's just say you have a pension that pays a certain amount, or Social Security that pays a certain amount. You want to add that all in. And so you got to ask yourself, how much do I need in terms of investments to allow me to live comfortably? And I think the mistake people make especially when they calculate this, is people think that their investments, their stock portfolio has to pay them a certain, they should never draw on principal. And that's not true. Almost all the retirees I manage money for drew on their principal, because at the time, and still, a lot of these big companies aren't paying dividends or low dividends. So you're not going to make it just through dividends. So you have to sell off a little bit of principal, but then you make it back. Ideally, you'd be drawing as much, or the depletion rate would be at so much that once you reach a certain age, you'll still have enough to cover all your expenses to the end of your life. So that's the goal. And so you can do those calculations. I mean, I'm gonna do $1 million. I know a lot of people don't have $1 million sitting around, but I'm saying saving to retirement. Even then, I know people don't. But I'm just saying it's a nice round. Let's go 100,000. Okay, I'll make it easy. 100,000. So let's just say you have some income, supplement it. You say to yourself, based on everything I have, where I think I'm going to be in housing, things of that nature, and I get some financial help, Social Security, I'm going to need, let's make it an easy round number, $10,000 a year. Or let's just say $20,000 a year to meet all my expenses and feel comfortable. Social Security will give me another, I don't know what it is, or my pension, or whatever it is, or my government benefits, or a pension plan for my government job. Only government jobs pay pensions nowadays, by the way. No private companies do, because the whole bet there is that you can take care of it all through your 401k, which is it's a big bet. I mean, people routinely mismanage their retirement plans. And that's why with some retirement plans, you can't even buy individual securities, which I think is great. I didn't think it was great at the time I was working for the companies I was working for, because I obviously am into that. But, and I actually was an investment professional at the companies that I worked at. So I actually worked in investments. So I felt it was especially bad for me, but I didn't necessarily have the time to manage my own portfolio though. So it still was good for me, because I didn't have to spend as much time thinking about that. So, but what you're going to want to do is sit down and figure out what you're going to need from that investment portfolio after taking out Social Security. Most people have some Social Security. Most people maybe have lower expenses by have paid off their house by then potentially, or they're downsizing their house, things of that nature. So I'm talking about financial planning now, which again I can do, but it's only for my viewers, only for my favorite people am I going to go into how to manage your money. Everybody's so different in how they view money. It's such a personal topic. What's the best way to say this? I enjoy the investment part better. That's probably the most. I mean, that's what I do best. But as far as like talking to individuals and being like, you should save here, you should cut expenses here. I mean, I did that as a banker. Every good banker should be able to advise their clients how they can go about qualifying for this loan. So as a proxy, I'm advising on how they can go about. I had a client I helped underwrite a loan for along with the underwriter. And this is why I hate cars. The business would have qualified for this particular loan that they were hoping to qualify for had they not purchased so many cars on loan. The reason is cars on loans have really high payments. So like they're usually 5 to 7 year loans. And I think back on it, and I've hated cars ever since then, because it was such a bad result for this business, and they were so disappointed. But they had just bought too many cars and on loan, and those payments are so ridiculously high. And you can qualify for those loans so easy. It's like, so you can get a lot of them even though you shouldn't necessarily. And so it's not like a home loan. I'm not talking about liar loans. I'm talking like a real home loan with full underwriting. We call it full underwriting. Banks call it full underwriting. As for a car loan, many times you can walk into a dealership and just do a credit pull, a hard credit pull, maybe even a soft credit pull, and they're like, oh, your credit, your FICO score is there. You said you had employment. We won't even call your employer, and we'll just give you the loan. So anyway, that's the whole reason I hate buying cars on loan. It's not my thing. It's just as a banker, and I had that experience, especially after that experience, and it was just so disappointing for this business. And it felt like their dreams took a backseat to cars. And I wasn't a fan already, and then I became less of a fan since then. It's just because you had to be there. That's the best way to say it. I mean, I want to do what's best for my good clients who are doing everything right. I mean, everything is right about the business. Everything would have qualified except for the fact that they bought too many damn cars. So, and I've actually despised cars since then. I really have. It's just been that type of experience. I associate the two, spending too much, and you get these easy loans that just collapse the loan for you. And it wasn't even me necessarily. It was just a heartbreaking thing to break down and say, you couldn't because you bought too many cars. And it was just tough news. It's like you're a doctor and you're telling them a bad diagnosis. And I don't want to give bad people, I don't, like, if you didn't take care of your health, and I still wouldn't want to give a bad diagnosis, but it shouldn't be a surprise if I give you this bad diagnosis. If you smoke cigarettes all your life and I say, hey, your tongue is burnt severely or something like that, I don't want to go heavier diseases because I just don't want to be dark like that. But let's just say your tongue's really burnt, I don't know, or you're chewing tobacco, you chewed your lip off, and I tell you that, it shouldn't be a surprise. I almost don't feel bad giving you that diagnosis because it's like, well, you did it to yourself. In this particular instance, it's just, they did everything right. They had everything. And literally, if it had not been for like one or two more car purchases, they would have had a very big loan that they needed. Yep, that's my story. I'm sticking to it. And it's, man, I hate cars. I really hate cars. I'm sorry to say that. For the folks that like cars, buying a new car, sparkly new cars, that's on y'all, okay? But then, so what I'm trying to say is, even as a banker, I try to advise my clients on how to get their financial picture right. And so in investments, it's no different. So it's like, it's just a part of what I do. And it's like breathing oxygen. I don't know, but it's this like big thing. It's for financial advising companies, especially nowadays, they like to package it into something like that to add more value. So I get it. It's just, I don't try to oversell it because I just feel like it's a part of what you should do, which brings me to a topic that I have on my loose notes here that I sometimes follow, I sometimes don't, in terms of debt. And I was just talking about car loan debt. You know what's the worst type of debt? I think everybody already knows, but I'm gonna give you a second to think about it, because this one just shouldn't be done, but people carry it, and it's credit card debt. Why? It's not only high interest rates, it's there for people who really, really need it, but it's variable interest, meaning if interest rates ever move up or down, that's what the interest rate for the credit card will go along with it. So let's just say you had a loan that you thought was in a low interest rate environment and you were doing fine. Well, guess what? In 2023, 2024, and you should check your balances if you haven't, that's gone up by a lot. And then sometimes credit card companies will give you like a teaser time period where you don't need to pay interest, so you forget about it and you think it's okay, and then you get hit with incredibly high, like 20%, 15, 20% interest rates, and you are stuck only paying interest on this balance, if even that. And so credit card debt in general, if you take out too much debt, is bad. Credit card debt will literally destroy your whole financial picture. And so I encourage everybody to stay away from credit card debt. It's the worst kind. There's other ways to borrow money. Credit card tends to be, I guess, the easiest sometimes, because you can ask for, obviously, especially if you're doing cash advances off of it, it charges you for the cash advance and extra fees, so it'll hurt you bad. So stay away from debt. And so that's the thing. I mean, when I look at companies, I look at the same thing, and when you look at people, it's the same thing. It's like, you just never know how people are affording things. And I'm not hating on this if you're doing it, but if you're in a lot of debt and you're living a life that you can't sustain, but I mean, we've actually seen this, like, there's influencers who do this to themselves. They put themselves on, they get all these followers, they probably buy a lot of, views. I never buy views. I'm like, I don't want to buy views. But the point is, you get more, views or whatever if you're spending money and living the fast life. And so this influencer couple, I think you can just Google it, literally was living, I think it was her husband who, I don't know, but the point is, they were keeping up with, I feel like there's a few stories like this. They were keeping up a lifestyle that was not sustainable, taking on a whole bunch of debt, and just to like brag, I guess. And I mean, see, I get uncomfortable even talking about this, because it's just, that's another reason why I do my thing here, because I'm just like, I hope that I don't want to be boring, but it's like I hope to normalize more normal posts, as in like just everyday posts. Like for example, yesterday I filed some business taxes, and so I was thinking about posting that. You know, I take a picture of myself with the whole stack of, it wasn't that big, but it was like that. Completed tax returns, and I was thinking about posting it. So, I mean, there's just so many ways to gain followers or things like that if that's what you're trying to do. But that's not just with Instagram, that's in real life too. Like people who try to keep up with the Jonases, many times they find themselves taking on debt just to keep a certain image or a lifestyle or whatever it is. And if you're in that cycle, I don't know what to say to you. Besides, only you can control that. Only you can stop that behavior of, you know, of overspending what you can actually afford. So, but I'm never envious of people who are living their life and enjoying their life, especially when I see it online or something like that. I don't get envious, because I'm like, they worked hard for it. They may have worked hard for it, or they may be spending too much, or they may be going into debt. And I'm not saying anybody who's living a good life is doing that. I'm just saying for the people who are watching that, and even younger folks who are watching their friends do it, or whoever at any age, you just never know what's going on in the background. And me as a banker, I've seen a lot of worms. I've seen a lot of wealthy people driving a lot of luxury cars, living a really high life, and their financial picture is very messy when you get when you get down to it. And then they're shocked, like I said, that they can't afford this loan. They're shocked that they have overspent. They're shocked that, so I've seen it again and again, and so I guess I look at it from that perspective. And they have the nice cars, they have the nice vacations, so I've worked with wealthy people, well, pretty much for the past, 10, 12 years as I've been in banking. So, and hey, a lot of the times though, they've worked for it. Like the wealthy people, they've worked for it, they've earned it, and so they live a life that they can afford, and so on and so forth. But by now I have a good idea of like what people can afford and what people can't, and what it typically looks like. So I'm not saying I have it all figured out, but I'm just saying, if you ever feel like going into debt to just spend on everyday items like a vacation, like if you're taking out like credit card debt to go on a vacation, don't do it, please. If you do, like I said, I mean, I'm not here to judge. I just wouldn't do it, because if you're carrying a balance, especially on a credit card, to like just go to the Maldives or something like that, you have to pay it off, and it's so hard to pay off at 20%. Think about it. Like, let's just say you take a $10,000 vacation for 2, 3, 4 people, and you put it all on credit cards. 25% a year, let's say 20% a year, is $2,000, okay, a month, that you have to pay just in interest. So let's just say it breaks down to $200 a month just in interest for one vacation, not paying any principal. So let's just say you start trying to pay some principal up, okay? So $10,000, right? Let's just say you double that payment. You make a $400 payment. You pay off $2,000 a year. You're not going to pay that $10,000 off for 5 years. And in the meantime, and in the meantime, you've basically doubled your payments, you know? So you've also paid $10,000 in interest. So, but my point is, you pay $400, so $4,000 a year. 4,000 times 5 is 2,000, or 4,000 times 5 is 20,000. So that's what you paid to pay off a $10,000 one vacation for putting it on your credit card. So looking at anything flying in the sky, I'm looking at no imminent threats. Again, actually, Catherine Levitt, I guess, came out and said today that there was never really a threat. But I don't know. I think it's a little strange that they are all of a sudden targeting California with drones. When I first heard the story, I was like, I don't know. I thought it was a little bizarre, but I think it is, possible. It's just, why California? How did they set up like that? And why not other targets? I mean, even Israel. Why not Israel? I mean, Israel's right there. I mean, they could shoot missiles into Israel all day, for example. But anyhow, there's still threats. I mean, because nowadays you don't even have to be connected to Iran. You can get radicalized online. And so that's what happened to the mass shooter in Texas. He was just radicalized and decided to take things in his own hands. And so on behalf of, y'all saw the shirt, and so, which it doesn't represent that religion from what I understand. So, but the point is, they've always worked in a decentralized structure, and I think that's more of a threat than Iran themselves, but who knows? fluid situation, and it's, causing obviously a little bit of anxiety. I would say if you look at underneath the market in international markets, it's causing a lot of anxiety. And the oil markets causing a lot of anxiety. Most people just may not see it in their portfolios because they've been widely diversified, because they've been listening to Tri's World and indexing. So you haven't felt it. But trust me, there's definitely fear in the market. So everybody who's saying, oh, this is a benign reaction. No, if you look deep into the market at industries and stuff like that, there's a lot going on underneath. So, and even without this event, this war, if this didn't take place, equities were already it was already a little bit difficult to find decently priced equities, even before that event. So this could have sold out for this market could have sold out for any reason. I don't think this situation helped, but I'm saying anything could have set off a bit of a correction. And that correction, again, it's not huge right now, but stocks can do anything in the short run. They can do anything. Anything except what everybody expects. Isn't that crazy? It's just, so you have to, you got to stop trying to guess at the short-term movements, because it's impossible to guess. It really is, in my view. No, I would say it's impossible to guess the short-term movements of the market. At least my game is, that's why it's a lot easier to guess where the market will be long run based on valuations today. And there were always pockets of value in the market. Always, even when the market, even before the sell-off. So there should be some additional values as the market continues to decrease potentially. But if you're a long-term holder, hey, this just creates an opportunity for you. That's how it should be thought of. I know people don't think about it like that. I'm just saying how people should think about markets decreasing if they're long-term investors, which they should be. And again, that's why I'm going into personal finance and saving money and all that, because you do have to save money, put money away that you don't need to see in the next 3 to 5 years, ideally 10 years, ideally until you retire. That's the type of funds that you should be putting into the market. Otherwise, it's funny, at least for me, right? I just noticed, because as a money manager, you manage accounts of all sizes. It was the accounts that were the largest accounts, typically, I hate to say it, but they were less worried about. So what I'm imploring people to do, even if you have fewer assets or smaller amount of assets, is to take the mentality of wealthy people and use it. I know it's hard, but that's why I'm saying you should only invest, even if it's a small amount. If you can invest a small amount and you can invest it for a really long time, you'll be impressed by the very long-term results. Use the rule of 72 to calculate it. Any amount. So let's just say 10,000. Let's just say 2,000. Rule of 72, 10% a year. So let's say you're getting, 10% a year. Rule of 72. It's going to be 7. I don't like that number. 7 years, 2,000 becomes 4,000. 4,000 becomes 18. I'm thinking of another number. 4,000 becomes 8 in another 7 years. So 14 years later, you got 8,000. 8,000 becomes 16,000 in 21 years. $16,000 in 21 years off 2,000. That's the power of compound interest. So your money goes like that. And so it really isn't, that's why they say, there's a whole saying behind it. It's like, it's not timing the market, it's how much time in the market. And so if you can't spend time in the market, you really shouldn't be investing. And if volatility throws you off, I hate to say it, but Charlie Munger said it. And I've been hesitating to say it because I feel like people can practice it, but some people just can't handle it. But Charlie Munger said, I mean, if you can't handle that, you really you're not fit to invest in stocks probably. And some people just can't do it. I don't know how to say it. That's the best way to say it. Some people are just not able to do it. They can't handle it. They can't handle, why is it going up and down? So I get it, but that's what I'm trying to help, right? So that's why, if you need to tune in to get a little, therapy and or whatever, and then feel free. And hear someone say, hey, everything's going to be cool, everything's going to be all right, then feel free. But I'm saying if you can't do it on your own and you always need somebody, you're going to find someone else besides me. You're going to find Jim Cramer, and he's going to be yelling his head off about everything. And you're going to be jumping up and down and all around, following exactly what Jim says. And he's been wrong a lot of times, and he does not acknowledge it. So be careful. And he's got a team of attorneys that'll protect him if he's wrong. So you will have no recourse. You cannot say, Jim, you told me to do this and I did it and you were wrong. I want my money back. No chance. No chance. And do we ever hear about those people? No. I don't know Jim. I've never been interviewed by CNBC. I don't think I ever will at this point, but I got to do what's best for my people. I got to do what's best for the viewers here. Like I said yesterday, protect yourself, protect yourself. You don't have to look at your portfolio every day. You don't have to look at the market every day, but sometimes it finds you. Sometimes you have that friend, that family that can't stop talking about it, and you jump everywhere along with them. So I know it's difficult, but my point is, if you need the reassurance every day, it's gonna be tough. It's gonna be tough. But this is what markets do. They correct. They go back up. In the long run, they go down, they go up. So I don't want to keep belaboring that point because I want that to sink in for people. It's just, I don't know what the best alternative is. But I was talking about probabilities yesterday. That is a tool you can use to say, hey, right, if I net 25 from a 50-50 odds, I can win 100 or I can lose 25. Okay, I should take that bet, even though I have a chance of losing. And you don't lose till you sell. And a lot of people sell at the exact wrong time. They buy at the exact wrong time. I'm not saying it can't continue to drift down because we've had 3 really good years. It's just, but like I was saying, if you want to be wealthy, think wealthy. Think long term. Think long term. This is what the wealthy people do. I'm telling you. Like the people with 5 to 10 million in assets or 10 million or more, you never hear from them because they already know. They know the drill. They're not stressing over it, and they have enough. And for whatever, the people with 1 million, I used to manage money for a really high net worth client, so this sounds little, but that was just my space. 1 million or less, they tend to get more worried. They tend to call you more, and there's nothing you can tell them, but they're stressing out more because they're watching it. They're watching it, and there's no problem with that. It's just that actually makes you worse off. If it's truly money you've set aside to retire on and forget about. That's what you should do. You should stick with the plan. You should stick with the plan. Think like the wealthy people. I'm trying to help y'all. I really am. Take that for what you will. But here, I'm going to bring up back my notes. I've been talking so long, I got put on standby. But I've got some either great crowds or I have for whatever reason, this algorithm, because I have apparently thousands, like in this month, like you can check my channel, by the way. You can check the channel, you can see it. It's like not all those are, most of that's from just this past week and a half, by the way. But I'm getting a lot of views for, like, let's say Charlie Munger. Y'all are smart, see? Ignore daily market noise. Very smart. These are my short videos, which I put on a playlist. If you want to go on my playlist and now you can just scroll through it. You want to doom scroll through my short videos, short video formats is what I'm saying. You could do that. And you're not doom scrolling. You're picking up knowledge. For whatever reason, they're loving these shorts. You go into YouTube AI Studio, by the way. They'll be your consultant. They'll be like, you should leverage Try's World to continue to cut short, do these shorts and reach this big audience that you've been doing. And so, but yeah, I mean, I think it's either 4,000 or like 10,000 new new viewers that's been seeing your videos. So I don't think it's the same people. It's just whatever the algorithm, I don't know. Maybe people online are searching for smart topics, because even one when I first posted, it wasn't getting views, and I was like, this is a good post. I'm thinking to myself, right? And it started picking up views. And I'll tell you the title, Business, Not a Math Equation. And crazy that as soon as I talk about Jake Paul, he's out there campaigning with Trump, which I already knew he was a Trump fan. I talk about how he thinks he's a genius because he's got a lot of money. And that may not be the case at all. But he really thought he's smart. He really thinks he's smart. He really thinks he's smarter than, I guess, good students in class. Not necessarily true at all. But what I meant by business is everything that I've been talking about right now is things are, well, in terms of that was more, you only need so much IQ to do well in business. You still need a high IQ to understand certain things, grasp certain things, grasp complex topics, multiple different topics from different areas hitting you at the same time. But there's a lot of other stuff that goes into it. And it's just like, in business, you don't need anything higher than arithmetic to do well. Like, you don't need calculus to do well. Those people who are doing calculus, though, are going to trick you into thinking that's what you need. That is, sometimes finance professors doing the fancy discounted cash flows and NPVs and all that, I get it. But practically speaking, you don't need all that. You don't need all that. And you'll find out if you read The Intelligent Investor what I mean. And most people can understand that book. But yeah, business is just a certain amount of IQ, and it's not like 1 + 1 = 2. It's not a hard and fast rule. It's probabilities. It's messy. The real world is messy. So you'll sometimes be wrong. But if you're wrong 20% of the time and it's a small cost compared to you're right 80% of the time and it's a big benefit, you should take that bet. And my example yesterday was 50% chance of losing 50 or 50% chance of winning 100. I actually think, 50% chance of losing 50, you multiply 0.5 by 0.5 by 50, you get 25. You multiply 0.5 by 100, you get 50. So you go 50 minus 25 is net 25 positive. So it's a positive, whatever it is, probabilistic scenario. And you should take that bet every time. And your odds become more in your favor actually as stocks become better value, meaning when they're dropping, actually, the odds become higher. That's how you should think about it. Again, I know not everybody can think about it or would like, is able to think about it that way, but, that is how you should think about it. That doesn't mean that you shouldn't check whether you were wrong. There's a chance you were wrong. Actually, in investing, there's a decent chance you were wrong. But as long as you're right more often than you're wrong, and the rights are bigger payoffs than when you're wrong, you're still going to do well. So, it doesn't hurt to evaluate if you're wrong, because sometimes you can be. And yeah, I had someone reach out wanting to be a guest on my pod. I didn't know. Here's what I'm all about, though. Like, if you ever want to be a guest, here's how I do it. All my content is authentic. It's organic. I don't try to plug a product. I don't try to sell anything to y'all. It really is who I am. It's called Try's World for a reason. So I wouldn't just put stuff in here for my audience just to, I don't know. I haven't even thought about that. So it was, I'm kind of I was surprised. But generally speaking, it would have to make sense. And so I haven't read through the whole email, but just for the folks who are curious and want to be a guest, it really have to make sense with Try's World. However, you can watch the videos and see for yourself what that means to me and potentially my audience as well. Hopefully they get what I'm communicating as well. So, and again, the trending videos, it's a lot of people are looking at my influence and the power of social media. I spoke from the heart on that one. And ignore the daily market noise. I got a lot of comments on my philanthropy videos, so if you want to check it out. I haven't had a chance to reply to them all. Some of them are really good comments and really good observations. I have that TikTok one with Otani, and it's going crazy. I have this gentleman who's making really good points, and I did that math in my head, and I used the rule of 72 as a rough proxy to if you were to invest it a certain way, how many years would it take to double? And you can they're rough guesstimations, but based on my estimates, right? I feel like they must have discounted by the 700 million contract by I feel like they just did a risk-free rate of return at 5% or something for it to make sense. It just, otherwise and so what I'm trying to say is whoever did that or whoever thought of that was probably thinking, hey, how are we going to provide Shohei a stable retirement into the long run and get him paid even after the fact? And so I just think too many ideas went into it to the point where it doesn't even make sense. It's so convoluted. Who's that guy in the Yankees that switched to the Juan Soto? I like his contract. It's really easy to understand. I feel like his contract literally is he's getting paid $50 million a year. And I don't think Shohei's getting that after you take into effect opportunity costs and things of that nature because of how long it's paying out. 10 years later, it pays out. But even Juan's is a little weird. It's a 15-year contract. Whoever is making these contracts, that's what I'm trying to say. It's becoming a trend in baseball. And I know smart basketball players will negotiate usually a pretty short contract with a high amount of payout unless they're trying to give some players to build a championship team. They'll give up a little bit. They'll give up I don't know, 5. What's reasonable? Let's just put it this way. I think Shohei's making probably, instead of what he could make, which I think as a top, what's Steph Curry making, $60 million a year? I think Shohei could make that a year. Or that's his value in the market. And Shea Gilgeous is probably going to be making $70 million a year. I think Shohei could make $70 million a year. That's what his worth is. And if that was paid out in 5 years, that's a pretty solid 70 million a year. But since his $700 million contract is spread over like basically 20 years, it becomes I think a totally different calculation altogether. I think it becomes closer to maybe half that. So over 10 years, you're giving up 30 million a year, let's just say. Why would you give up 300 million a year? Oh, he can make it up in endorsements. I don't think anybody would do that in their right mind unless they really, really thought that they weren't giving up that much. They're just trying to help the team. I don't know anybody that would give up that much unless they thought that that was a super stable thing. Like they value stability more than anything else. They don't want to take a risk with opportunity costs. They're not trying to risk their money and invest it outside of maybe T-bills or, T-bills. They pay 4%. So I feel like that was the calculation. And then people who are talking about taxes, that's federal tax, that's state taxes, people. And that's assuming he moves to a non-state, a non-income tax state. That's assuming that happens. And by the way, I'm doing these thumbnails on Riverside, and they produced a cartoon of me with wrinkles that show my wrinkles here, and like, so I'm gonna stop frowning so much because now I'm like, dang, the freaking AI picked up my wrinkles on my forehead, but I still look young apparently. I got carded the other day. I still get carded. It's crazy. And then they look at my license and I'm like, yeah, dude, I'm 41. But man, I can't believe I still get carded. I'm not even trying to flatter myself. I'm just like, sometimes I'm really like, for real. But the whole point is the thumbnail is generating some random stuff, and sometimes I post it anyway just to see if it'll be better than just me. Like sometimes I'm blinking, so I'm like, this is my thumbnail. Or sometimes I'm like just scratching my head, and so I look stupid. And so I'm like, all right, maybe I'll just do whatever thumbnail that the AI produces. And I'm too lazy to keep sitting there like, because AI can be weird. After they, if you want them to shift something, it's still in its development stages, but it's still really good. And so it's really hard to make it change though. Like I was like, so it was a cartoon. I was like, don't make it a cartoon. So they just basically produced a thumbnail of no thumbnail. So I'm like, okay, I'm just gonna post this cartoon. And one of them made me look like, I don't know, like I was in an anime. I was like, holy moly. I was like, why are you making me look like an anime cartoon? Like, come on. For real, I start thinking, what are the biases built in? That's a real thing. I'm not trying to be like, oh, but there are, depending on who builds it, like what it spits out. I mean, that was the controversial thing when it first started producing stuff as well, was it was producing stuff that was offensive to minority, like displaying them in stereotypical stuff and caricatures almost. This is AI. And so sometimes the builder of the AI can have a biased lens on it. So it's still, it got taken down for a long time, but now it's just out there. So it's moving at a fast rate. And so there's people out there who, of course, are saying, hey, what are the guardrails, stuff like that. More so because how fast it's replacing jobs. I mean, look at, in the past, whatever, year, it cut down my editing by, like I've been saying, at least I would think 80%. I'm doing a better job organizing my podcast as well, but I have noticed that and then now I've got like a consultant and how to consult me on my podcast. It's intense. It's really good, and some of it's really good. So I'm gonna keep looking at my list here just to see if I covered everything. Yeah, and the philanthropy comments, a lot of good comments. I haven't gotten to them all. If you haven't had a chance, check it out. But yeah, there's this whole bit on philanthropy. But yeah, I appreciate some of the comments. I'm just again, I'm like surprised that it's like generating so much comments, and it seems to resonate with certain people. And even if people say things negative, I know it's reached a pretty big audience. Usually, if there's 2 views, like there's no comments, typically. But yeah, I mean, I can't think of anything else as of now. Personal taxes, April 15th, y'all. So that's sort of the next one. But I am happy that I got over, that I filed at least business tax returns. Not all the businesses, but the hardest one, the most difficult one, I was able to file. And I need to look into, I was able to figure out the online system. This is a little wonky now, but maybe y'all like it. Maybe it'll be a niche crowd, like YouTube advised me. They're like, hey, I see that you're producing music. Maybe show them what you're doing in FL Studio to create a more niche audience. I'm sure that would be great. I'm sure that would. It's just YouTube doesn't allow me to play music. So they flagged on my lives, I was playing just Spotify, and they blocked my video. in all these areas because I was playing Spotify music. So how the heck am I supposed to like DJ? And the only place I could post that is like Instagram, like especially if I'm doing mashups. But if I start producing my own music organically, and I was already going to use AI to produce a track, by the way, so I might do that just to like produce a quick track and see what I get. Because you can literally do AI drums, you can do AI sound, because I remember Pink Panthers was like, I'm not good at drums, so I have so-and-so. But there's AI drums actually on the DAW, it's called a DAW, digital workstation, basically. I don't know what it's called. What the A is, I think it's, I don't know what it is, but it's a DAW. And she uses the Apple one. There's an Apple one that she uses. But on that, there's AI drums. I don't know why she outsources that, but she probably has a good AI drum. She probably has a good drum person. And, you know, AI is so funny. It's like, it'll produce something, you don't know what it'll produce next. And so what's your sound? How can you ever claim a sound if it's like different every time? You don't even know how AI produced it. So that's my only concern with using AI to produce music, is the repeatability, and then I don't ever develop my own sound. But I've been seeing a lot of things. I haven't gotten away from that stuff, but obviously I'm doing these podcasts. But these are more right up my alley because these are within my expertise, within the stuff that I do. I don't have to think as hard about it. Producing music, I have to sit down and like, it's a whole separate like mindset, I feel like. But that doesn't mean I got away from it. It's just, I do think about it. It's like with music, I usually, it's funny, I'll usually get inspired by something and then I'll try to produce it. I'll try to produce the sound. I'll try to look for the synth. So it's percolating, and I hope it's not just procrastinating, but I had taxes, obviously. I have to take care of the main. I have to take care of my true love before I take care of my other loves, which is music and all that stuff. So, but I have been thinking about it. So I have been thinking about music and producing music and how they go about doing this. And I always find inspiration. And so I usually do that when I'm inspired and I have time. So both. And hopefully I'll have some, but it's, I went into it yesterday. Managing a business is a full-time effort. And this at least falls within that because it allows me to journal it. And it allows me to current clients to see what's been going on in the day and follow up on news that I see as relevant and important and so on and so forth. So it's still within it. And I think it's interesting too, in terms of what I've been talking about, in terms of being able to help others and speak on issues of importance to me. So with that, thank you for joining today. I keep picking up subscribers. Not like a ton, but yeah, it's mainly through my shorts. I don't totally understand like what's going on at all, really. But I appreciate it. I do it as if it continues to stay fun for me, I continue to do it basically. But I have to have the time to. I have to be well organized and disciplined in my if everything checks out on the main stuff, then I could do a pod or something. But I may have to skip some days, so I haven't yet. But at least within the past week, that's not a long time. But it's just I'm getting so much momentum with these shorts. I actually don't know what to think of it. I'm not like blowing up necessarily, but this is the most subscribers and the most views and it's partly because of the ability, the software that I use now allows me to do that easier. It's again, AI that's helped me become more productive in this area. So whatever, if it'll help me that way, that's great. But anyhow, I've been talking for an hour. It's getting warmer. It's getting hotter. Probably gonna have to run the air. I think it's gonna be 85 next Tuesday. I'm gonna be running the air, or I may be running a room AC too. But that's so loud. It's just so loud. So we'll see how that works. But just to warn y'all as it gets hotter. Anyhow, happy investing. Happy Thursday. Weekend is on the horizon. So hopefully hopefully y'all have some nice relaxing plans. And thank you for tuning in again. Thank you for subscribing. Thank you for, I don't even know if people see this part because it's like nobody watches. Most people watch my shorts, not the actual podcast, but for the people tuning in there or even watching the end, like I said, appreciate the subscribes and the likes, the comments, and the views. And don't force yourself to do it though. Like if you're my family watching this, like you don't have to watch these. If you find it helpful, then so be it. But the threshold to get to influencer status is really high. Like you have to have 500 subscribers. I have like 30. You have to have millions of short views in 90 days and a certain amount. You could just look at the metrics. It is really hard to hit. And so I'm like, I'm not even trying to hit that. It's more like if I even get anywhere close, then it shows that I'm making an impact. How else do I gauge it? I don't know what 10,000 accounts is. So I have no idea. But if I'm hitting their metrics and to the point where, hey, you can be a partner, that's probably pretty big. Not that, but even then, you're not making a lot of money. So it's like, that's why it's like, I'm not doing this for that. If it gets to that, we'll see when it gets to that. But I mean, the people that are making money, they got like, I think tens of thousands, hundreds of thousands of followers. And I'm like, nowhere near that, but it doesn't really matter. That's what I'm saying. It's like, I feel like if you're doing it for fun, then who cares what happens? So appreciate it, y'all. Have a good night and happy investing.